Welcome back to Switzer. Now, there's been a lot of talk about rising house prices. So let's pick the brains of a guy who watches property prices 24/7. The founder of SQM Research, Louis Christopher, joins us. How are you, Louis?
G'day there, Peter. How are you?
Do you watch property prices 24/7? Do you ever sleep, Louis?
No, I don't actually. No, look, I do watch. I've been watching for a very long time. It's been quite a few years since I've been in this industry now, and I love it. I find it really interesting, and obviously it's very relevant to the economy.
Now, sometimes, and I'm sure you've even heard it on my program, that some of my guests say, gee, the real estate people sometimes can talk up house prices when they're not really moving. Do you see that kind of thing, Louis?
Oh, I definitely see it with certain operators, and that actually gets me fired up from time to time, Peter. I don't like it when I see it. I think it's a market that really deserves some good transparency, and that's the problem I find with some of these spruikers, is that they don't understand that they're actually doing damage to their own market. This market needs good operators in it. It is actually a very good industry, really, and real estate can be very good for wealth. It's just that we need some cleaner operators in it, that's all.
Okay. Do you think the number of unclean operators are very substantial?
Look, to be fair, I think every industry has some bad apples, and obviously real estate is no exception, and there are some very, very good operators in the space as well, some very trustworthy real estate agents and some very, very good analysts in the space too. But look, I think it's an industry that we need to look at. I mean, I remember your interview from last night with John Edwards, and he pointed out the problems with auction clearance rates. I couldn't agree with him more. We do have a problem with the reporting of auction clearance rates. They're a lot higher reported in the papers than what's actually happening on the ground. That's a fact.
How does that happen, Louis?
Well, what's going on is that, let's say you're a real estate agent, and you're an agent which tends to sort of do a lot of auctions as part of your business. Now,
Right.
if you have a bad day where, let's say, most of the stock passed in, you don't want to actually tell the world that. And that's the problem. And so when the reporting body, whether it be APM or RP Data or whoever it may well be, rings in, you'll tend to be not in the office. And so these auctions are not reported to the reporting bodies, and in turn the reporting bodies actually sort of leave them out of the count. They completely leave them out of account. It's like as though they never existed. And that's an issue I have with it.
Okay, so what's happening with property prices around the country now? I'm getting the feeling from the kind of reports that I do on Sky News each night that we're starting to see capital cities improve, but you know, are we missing something, or is that actually happening?
Oh, look, I think there is a recovery occurring. Depending on where you are, we're actually experiencing either a fairly strong recovery to one that's very tentative at best. So the strongest city right now is definitely Sydney. We're seeing some fairly solid capital growth in the lower and the middle end of the market, and particularly in the outer ring of Sydney. Going to another city, for example, in Melbourne, I know the Real Estate Institute of Victoria recently came out and said house prices are rising by 5.25%. That's not the case from what we can see. It's still fairly weak, and the recovery is only tentative there. But it's better than where we were 12 months ago for Melbourne. Melbourne house prices were falling pretty quickly 12 months.
Yeah, because Louis, Melbourne got an oversupply of both apartments and houses, didn't it, a few years ago? After that massive, did it rise 25% in 1 year or something?
In terms of stock listings?
No, they had a massive price surge a couple of years back.
Price surge, yeah, they did. That was in 2009, yeah, and it was actually about 23%. Yeah, a very strong surge, and indeed throughout most of the noughties, Melbourne did very, very well, but it got to the point of being pretty unaffordable, and at the same time we had a situation where there was a surge of new developments right across the city, particularly in the outer skirts where we had a lot of house and land packages come on. And that new stock is still there today, so there's still a lot of stock that needs to be absorbed. Right now there's actually about 45,000 listings in the Melbourne housing market compared to about under 30,000 for Sydney. So that just gives you a bit of a comparison of the overhang in Melbourne.
Is there good, if you're a sort of person who can pick a property where you can find a tenant, is it good buying in Melbourne then?
Oh, look, I think there's some bargains to be found now, and given the fact that prices have come off in this current downturn, coming up to 10% in Melbourne, look, there are some places where there are certainly some opportunities. And on the rental side, we're also noticing a few pockets where rents or vacancy rates actually starting to tighten again in Melbourne. So it's certainly not all bad news for Melbourne. I think actually the worst is behind it in terms of the bad news for Melbourne. I'm just a bit concerned about that overhang of stock they've got to get through. It's just hard to see how we're going to see, for example, a new property boom in that city. A modest recovery, yes, we'll get that, and house prices have stopped falling from what I can see. But to suggest that we're going to get a strong recovery this year, I don't see that for Melbourne.
Okay, the Gold Coast, it was clobbered during the GFC. How's it doing now?
Yeah, look, you're right, Peter. I mean, it was absolutely clobbered, particularly down the southern end of the Gold Coast. Coolangatta, I can tell you that houses there, in terms of asking prices, have come off by 50%. That's from peak to trough. So in certain areas of the coast, it's been absolutely smashed, much to the destruction of investors who bought in, say, 2009 and 2010, sadly for them. But however, there is some good news on our indicators that is suggesting the Gold Coast is finally bottoming out. What we need to see on the Gold Coast now, though, is maybe a little bit of a lower dollar. If we get that, that'll encourage more domestic tourists to the Strip, and actually more overseas tourists will come in, and that will get that local economy going. But yeah, we need to see a lower dollar before we can really say they're going to go into a strong recovery.
Apartments versus houses, just generally first, Louis, I'm talking about the investor, the potential landlord. Are apartments a better bet at the moment?
Oh, look, Pete, I still look at these things over the long term, and the truth is that when you look at total returns, so the rents plus the capital growth, and you look at this over, say, a 7 to 10 year period, they actually pretty much perform in line with each other. Over the short term, you do see gyrations, and it is true that in certain parts of the country, once again going back to Sydney, that units have been outperforming in the last couple of years, and I think that's an affordability thing more than anything else. But my bet is, look, if we start looking at this over a 7 to 10 year period, or the next 7 to 10 years, you'll see that the two will be level pegging.
Because, CBD and apartments, very popular, particularly in Sydney and Melbourne, I guess, as well. What about Brisbane? Brisbane's had a few challenges in recent years. Is it starting to come out of the woods? Yeah,
it's look, I think the market has stopped falling in Brisbane, and it certainly didn't fall as much as, say, what's happened on the Sunshine Coast and the Gold Coast. It's just sort of ended up being about an 8% decline from peak to trough in Brisbane. And the latest indicators suggesting the market has flattened out. House prices and unit prices have stopped falling. The thing is, though, with Brisbane is that, look, it is a solid local economy. It does get good population growth, but the thing is that the developers have a lot of flexibility there. They can add supply fairly quickly. So the moment you see a surge in demand, the developers come on stream pretty quick, and so supply catches up. And look, I got to say, yes, I'm a little bit concerned about what could happen with mining and how that could relate to Brisbane. There has been a lot of resources jobs being created in Brisbane, so we just need to be a little bit cautious about that. But certainly to the point that the house price declines that we had between 2010 and 2012, they're now behind us for the Brisbane market.
Quickly, Louis, the proposals from the government around superannuation and capital gains tax, obviously if they don't get up, the proposals before the election, do you think there'd be a window where a lot of people will rush to try and get something in their self-managed super fund in case a future government revisits that capital gains tax implication?
Yeah, it's a good question, Peter. Look, certainly there shouldn't be any rush to sell out, because the government has given ample time for anyone that already owns a property in the self-managed super fund. They've basically got 10 years from now. So no one should panic and try and sell out. In terms of buying in, look, hey, we might see a few takers on that. But, look, I got to say, self-managed super funds and residential real estate, I don't know whether it's 100% of a great mix there, Peter, because, well, for starters, you don't get the negative gearing benefits. And then you've got issues about, whether you can live in the property or not, and whether you can sell a property to related relatives, etc. So it's not the best for self-managed super funds. I personally think commercial property is better, or a positive cash flow property is actually better when it comes to SMSFs.
All right. Well, Louis, thanks for joining us on the program.
Thanks for having me, Peter.
That's Louis Christopher, founder of SQM Research.